And this is the post that I made that, okay, I'm selling Nestle and I'm buying all these different types of stocks. This is not a stock buying recommendation. This was a complete analysis of each of these stocks, that why am I buying CAMS? Why am I buying CDSL? These stocks are trading at 30% discount. Hi everyone, welcome to today's video. So in today's video, I'm going to discuss 5 specific reasons why you should not be buying Adani stocks. Many of you would be thinking that, you know what, Adani stocks have fallen by a lot in the last few months. So what further will they fall? क्या ही बचा है गिरने के लिए, right? So let's just go and buy them. What's the harm? No, so this bottom fishing strategy might not work on Adani Group. Very recently, you might have heard the news that in the US, there is something called as SEC, which is Securities and Exchange Commission. It is very analogous to what SEBI does in India. So SEC in the US summoned some of the US investors who had invested in Adani stocks and have asked for more clarifications on why have they made investments and divulged some documents around it. What are the exact details? No one knows. That was between the large investors in the US and SEC. But whenever SEC summons go out, it kind of creates panic in the market, and that's exactly what happened with Adani Group of stocks also, that these stocks started going down quite aggressively in value. Just for context, take a look at Adani Enterprise. It fell by 7.5% in a single day. So the troubles are not over. Please understand this complicated story. You will learn a lot of macroeconomics, lot of finance. I have tried to simplify a lot of things, but this is a complicated video. Please share such videos. It takes like 1.5 years to teach all these corporate finance topics at a business school. I'm boiling it down in very simple language. So just a simple like, share from you would allow these type of videos reach out to more people. So with that out of the way, let me start discussing 5 central points why you should not be buying Adani stock. So the first key problem or first fundamental problem with Adani Group of stocks is that these are highly leveraged and debt oriented companies. Now, why is debt such a troublesome thing? Let me give you some explanation around it, but please understand the flow of the story. So basically, whenever a company, so be it any company, they mostly have 2 options of financing their work. So the first option is called as debt financing, and the second option is called as equity financing. Debt financing in very easy to understand term means loan lena, right? So you go and take a lot of loan, then you use that loan in order to build your business. Now this is a route that Adani companies or Adani Group of companies were taking quite aggressively. And then what happened was that their debt grew and grew. So they became highly leveraged, and this story continued all the way up until 2021. Now you'll say, "Acha, is चीज में क्या बुराई है?" Right? I mean, what is the harm in terms of taking debt? A company can forever keep on taking debt as long as it is able to repay its loan. See, there is a fundamental problem in terms of taking debt, and for this you need to understand it through your own example. Consider the fact that your yearly income is, hypothetically speaking, 1 crore, right? Now you are taking 10 lakhs of debt, right? The first year. So, okay, fine. You will be able to easily pay it. The second time you take a debt, you will say, yeah, 50 lakh I'll take debt, 50 lakhs I'll take debt. You take that also. Third year, you take like another 1 crore in debt. So what is happening is that after every successive stage, if you are piling up more and more debt, then what ends up happening is then you have to pay higher interest on that new debt. Why? Because your credit utilization is somewhat going up. Very similar to that if you keep on maxing out your credit utilization limit, the second, third, fourth time you go to a lender to take debt, they are going to say that, you know what, boss, you are a very risky player. I'm going to give you debt, but I'm going to charge a higher rate of interest. Now, this is also coupled with the fact that what is the general interest rate in the economy. For example, here is the interest rate chart in India, and you can clearly see that right now we are at the peak interest rate. So to cut the long story short, this debt taking option is a very expensive option if you keep on maxing it out. And therefore, you would frequently see Adani Group of companies doing what? Pledging their stocks. For example, here you can take a look at Adani Power and you will see this pledged percentage of 25.2. So 25.2% shares have been pledged. So why was this pledging done? The reason there is very simple, that Adani Group of companies are very capital hungry companies. In order to grow any of their businesses, they require large sums of capital, hordes and hordes of money. Now, up until a point, taking debt made sense for the company, that the interest rate that they were getting was sensible. There was low interest rate in the economy back in the year 2020 when COVID problem hit. But after that, the interest rates have gone up in the economy. So debt itself became expensive. By the end of the year 2021, even Adani Group became highly leveraged, very debt oriented company. They even pledged a lot of their shares so that they did not have to borrow debt. Even very recently, just before the Hindenburg scandal, you would have heard the news that Adani Group was coming out with its FPO. Now, what type of financing this is? This is equity financing, right? What does FPO does? This is follow on public offer. This was offloading of shares. Like, one could argue that at higher prices, whatever, but this was FPO issue. This was a type of an equity offering in a way. This was equity financing. I know that I'm teaching like highly complicated corporate finance and bunch of those things, but please understand it. This will help you decode the Adani story. So please rewind the video, watch it again. Very important video. You will understand a lot of things about corporate finance. Okay, so back to the story. So to cut the long story short, what has happened with the Adani Group is that number one, they were highly leveraged. Debt was already very expensive for them. Therefore, they had to go to equity financing option. For example, the FPO thing in the past. Unfortunately, that FPO thing fell apart, and very recently, in the last 1 year, Adani Group of companies have gone back to their debt option. Now you'll say कि अच्छा है ये बड़ी flip flopping हो रही है, debt से equity चलेगा, equity से debt आ गए, हमें क्या फर्क पड़ता है? Why do we care so much? You need to care. If you are an investor, you absolutely need to care. You need to understand something called as cost of capital. So let me very quickly talk about that. So what has happened in the Adani Group is that they first had a lot of debt, then they went to their equity option. Now they are going after debt again, because to cut the long story short, they need like crazy ton of money in order to grow their business. But what has happened in this entire game is that the cost of their debt has gone up quite aggressively. Imagine it to be this way, that when you are a low risk customer, you might get a home loan at let's say 8%, right? But if you have taken and if you went and borrowed from like 10 different banks, and you go to the same bank after like 5 years, and the bank will check, how many more loans have you taken? Then you say 10 loans only I have taken. So what is bank going to do? Bank is not going to charge you 8% now, it is probably going to charge you 10%. So what is the meaning of this 10%? This in finance term is called as cost of capital. It could be both equity capital and debt capital. So it has a certain associated cost. Now in this new game that Adani Group is playing, where they are piling on more and more debt, their cost of capital would have definitely gone up. I would love to hear counter arguments, but please take this as economics finance class. This is not a political discussion. I'm not targeting an individual group. I am concerned about retail money. I am concerned about my money. So whatever I understand, I explain it to you. Please process it accordingly. I have absolutely no biases against any business. So anyways, coming back to the point, what is happening is, fundamentally speaking, that this cost of capital for Adani Group has gone up. It is very difficult for normal retail investors like you and me to check now that at this new borrowing, what Adani Group has done in the last 1 year, where they have taken even more debt, what is the rate of interest that they are going to pay? Banks are not going to tell us. But I can tell you, right, I mean, this would be at least somewhere around 8%, very easily speaking. Now, why have I told you this complicated story so far? Well, to relate it to a very important concept called as ROCE. Now, if you check the ROCE, which is called as return on capital employed. So if you are borrowing at 8% and your ROCE, which means return on capital employed, which means that for every $1 of the capital that the company is raising, how much money is it going to make? So in Adani's case, if it is raising, let's say 100 units of capital, then it ends up making 110. Now, this is not very high, because you'll say, yeah, this is like a good business that you're borrowing at 8%. So you will pay bank 108 after a year, but you're making 110. So you're pocketing a difference of 2 rupees, right? So this seems like a great business. No, this is not, because there is inflation also, right? So therefore, it is said that ROCE of companies should be at least 15%, because in the economy in India, the inflation is usually around 5 to 6%, right? So you need to factor that also. And the cost of borrowing is usually around 7 to 8%. So therefore, if a company is generating 15% ROCE, then its effective cost of capital comes out to be roughly 12%, right? So that leads to a little bit of profit margin. But in Adani Group's case, if you go and check individual companies, you will hardly find a company that is generating above 15% ROCE. So I'm simply summarizing a very key point regarding the Adani Group of companies, that right now it is in a situation where it has to cut its equities plan, because equity was a slightly less expensive option for the Adani Group. They had to abandon that plan, FPO plan gone, vagera. They had to move back to debt. Now, according to experts, for example, Professor Aswath Damodran is considered to be one of the world's foremost financial experts, valuation experts. He himself has said this statement, that Adani Group collectively carries about 3 times as much debt as it should. And even the Adani Group realized that a while back ago. It was trying to cut back its debt. So you can see from this article that at one point in time, they were trying to repay their debt very, very quickly. Then the Hindenburg issue came. They were unable to raise money elsewhere. So they had to go back to the debt market. Now you'll say that, okay, probably you are trying to weave some conspiracy theory here and there. Can you show some concrete data around the fact that debt is dangerous? Definitely. So S&P has re-rated the Adani Group of companies, so at least a couple of them, and they have downgraded it. So this is the article, and credit risk was one of the reasons why this was done. And now in the last 1 year, since Adani Group has raised more debt, it becomes an even more dangerous game from that perspective. So this was a hyper complicated point, but if you have made it so far, congratulations, you have understood a lot of complicated finance. So let's move on to point number 2. Now the second key reason why you should not be buying Adani stocks right now is that some big investors are cutting Adani stocks like anything. Second is that people who are entering, or at least big investors who are very vocal about Adani groups, I tried to study their reasons. I tried to get a sense, okay, why are they putting so much money behind it? At least I was not clear. So let me explain this concept by using two specific concrete examples of two large investors. So there is an index called as MSCI Global Index. It's a worldwide, world-renowned index. A lot of money goes into it. They do a lot of investing in emerging equities. And in India, they have made some recent moves, and this is the chart. You can see it. They have exited 3 stocks in India. So one is Adani Transmission, one is Adani Total Gas, and third is Indus Towers. Now, the entire perspective behind MSCI is that it is an index. For example, in India, we have a Nifty 50 index, we have a Sensex index. In the US, we have a Vanguard index. So all these different indices, they act as a barometer. They act as a specific point that, okay, this is the pointing star that, okay, if MSCI is cutting its holding on certain stocks, it will go and indicate to a large set of investors, large set of investment banks, large set of hedge funds, all these big players will think, MSCI, why it has removed these 3 stocks, then probably if we are doing any kind of passive investing, we could also possibly do that. Why? Because it acts as a barometer. So this has pushed a lot of investors to cut their positions. Now come the natural question, what exactly happened, that why is it that MSCI is cutting its position in Adani stock? So the answer you can see from this particular article. So what they have said is this, that as the 2 companies, Adani Transmission and Adani Total Gas, do not meet the relevant free float adjusted market cap. Now, okay, new weird terms keep on coming up and they complicate the story so much. So let me break down what this means. Again, this is a complicated point. I can't do this. Is like corporate finance. So see, this is the theoretical definition of a free float. That free float means outstanding shares minus restricted shares minus closely held shares. And the formula for free float adjusted market cap is this much. I'll say, okay, yaar, ye to bahut hi ajeeb si baat hai, right? And what is happening? Can you explain it like layman's terms? Yes. Okay. See, free float simply means that, for example, I own a company, right? I have 100 shares which are listed. I'm giving you simplified example, so please don't go by correctness. I'm doing it for the ease of understanding. So my company has 100 shares, and let's say that all of them are there in the open market. So what is the free float of the company? The free float of the company is 100 shares because everything can be bought by everyone, right? So free float is very high. Now let's say in situation B that I own 90 shares, right? And only 10 are there in the open market. Then what is the free float? Free float is how much shares can be easily publicly traded. So the free float becomes very small, only 10. When the free float goes down, the problem is that the stock can be manipulated more and more. Why? Because it has a small base. For example, if tomorrow, if I'm holding 90 stocks of my company and the free float is 10, I decide, you know what, I'm going to buy 2 more stocks. So I've increased the demand quite aggressively, or I might have increased the demand very aggressively for my own stocks. So all these things need to be understood. So that is the entire funda behind free float. I will not spell it out. You guys are smart enough to understand. This was one of the allegations that was made in the Hindenburg report also. So no clear conclusion has come out regarding the same. Let me go back to this formula just to make the final point that free float adjusted market cap is कि कितने आपके outstanding stocks minus restricted shares times the price of the share. So see, this is not a market cap issue that the company has become very small, therefore we are kicking it out of index. It is probably a free float issue. Why am I saying it? Because these are the list of 6 Indian stocks that are now part of MSCI Global Index. So you will see a bunch of companies, for example, Varun Beverage. What is the size of the company? It is fairly small compared to like Adani group of companies, so on and so forth. So from that perspective, you will see that this is not a market cap issue. This is a free float issue. So I hope you got the point that what is even MSCI is concerned about. So now let me present the backers of the Adani group of stocks as of now. And one of the biggest backers that it has right now is called as GQG Capital. Now, what is this company saying about Adani Group stocks, that why is it buying Adani Group? So they are pretty much going to buy roughly 2.5 billion worth of Adani stocks. In fact, they have already made that investment as far as I know. And the perspective, when the leader of this company was asked that, okay, why are you buying Adani stocks? His point of view is that a lot of competition they have is with less dynamic public sector companies, which reduces political risk in our opinion. Now, I don't know how to read this statement. They are not saying that, you know what, this company is great. What they are saying is that, you know what, ye sab bekar hai, therefore this company is good. Now, I do not get a lot of faith by this type of investing, because you're just assuming that, you know what, these companies are not going to get contracts. These companies are forever going to be sick. These companies are just bad, right? I mean, they cannot improve. So, yeah. So this is like a negative play according to my understanding. You will say ki aapki opinion hai. You know, everyone has an opinion, yes, 100%. So this person who is investing his money or his client's money, so it's his opinion, his money, 100% agree with that. So let me also show you the performance of GQG partners in emerging market equity. So here you will see trailing returns versus benchmarks, right? Please don't go by 1 month, 3 month return. We are not like that short investors. Take a look at 1 year, 3 year, 5 year. So they have performed very badly compared to benchmarks, right? So this is a point to be noted regarding GQG's investing. So, okay, if we study the shareholding pattern of Adani group of stocks right now, then what is exactly happening? So you'll see that promoters have been able to cut some of the holding, and I'm talking about Adani Enterprise because it kind of indicates the entire sentiment in the group. So you'll see that FIIs have cut position, public is building bigger position in Adani stocks. Kyun? Bottom fishing chal rahi hai, right? Ab kya hi karega? What more will it fall? So let's buy more and more. All this is happening. See, this is not a stock buying, selling recommendation. I am discussing fundamentals. Tomorrow, Adani stocks can go up by 5x. I don't know. I cannot make any of these predictions. I can look at data, I can understand data, and I can act as per data. But stock market is a weird thing. Sometimes when you feel that, you know, a company is not going to go up, it goes up by like 10x. So no one knows. But I act by data. It kind of helps me. It reduces my risk. You please cultivate your investing style. If you feel that, you know what, all this analysis is incorrect, it's a great buying option, then please execute that. I'm just here to present a logical perspective, and you please draw your own conclusion from it. Now, the third reason to not buy the Adani group of stocks is the corporate governance issue. So earlier we spoke about in the video that the US SEC has kind of wrapped up their investors or large investors in the US, and they are trying to open up investigations that, okay, are you investing via shell companies or are you doing some funny stuff? So they will do those investigations. If something blows out, then it becomes a major issue from that perspective. So this is the first corporate governance issue. Even the Hindenburg issue has not been completely resolved. Now, many would say that Supreme Court has given a clean chit. Well, Supreme Court answers specific questions, specific queries. Those 3 questions, they might have given a clean chit. But has the market given a clean chit? That can be easily judged by looking at the price of the stock. So let me tell you how to do that. So for example, if you go on Adani Enterprise, you will see that the Hindenburg issue happened somewhere here. The stock fell by 70-80%, then it recovered, right? But has it recovered to its original price? The short answer is absolutely not, that it has not. And even right now, if we look at the mid-term perspective of the stock, it looks bearish. And please note the word that it looks bearish. It's not a guarantee that it will definitely fall. We can all look at data charts and draw our own interpretations, and that is precisely what I am also doing. On top of this, Deloitte has also raised certain concerns. So I would not delve deeper into this corporate governance issue. I have given you enough hints. Now you can Google more, you can understand more what is meant by corporate governance, and you can judge the firm on those parameters. Please understand the entire spectrum, entire perspective, understand Adani's side of the equation also, what their management is saying, and also what the open market is saying. So you have to balance both the perspectives and draw your own conclusion. Now, the fourth reason to not buy Adani stock is the concept of PE re-rating. Now, the easiest way I can explain you is by using the example of IT companies. So if you consider, for example, TCS, what you will notice in the form of PE ratio is that its PE used to trade at somewhere around 25, right? Then 2020 COVID crisis hit here, and after that the stock started to run like crazy. And there was a temporary PE expansion. It started moving in this zone of roughly 35 to 40. So that became a PE expansion zone of TCS or tech stocks from 25 to 35. Now, this is something that you can verify for Infosys also, for Wipro also, bunch of other IT companies. Now, if you ask a very logical question here, okay, why did the PE expand in this zone? The answer would be that the narrative in the market was, you know what, sirf IT companies bachengi, tech companies bachengi, everyone is going to sit at home, they are going to do work from home forever for their entire life, and therefore people will consume tech more and more, and therefore PE should expand. So PE actually expanded also. And now what is happening? Well, it is down pretty much to its previous level, almost previous level. Every single IT company is now sort of getting massively crushed. In fact, Nifty IT is down by roughly 30-35% from its peak at this juncture as I'm making this video. So this is called as PE expansion or PE re-rating, that it can go up also, it can go down also with the narrative. Then apply this in Adani Group's context, that okay, why is it that Adani Group's PE expanded like anything, and why did the narrative play out? And if it is going to contract, then till what point it is going to contract. So again, let's pick the group's main stock, which is Adani Enterprise, and let me do this analysis. Okay, so here is the PE analysis, right? That before 2018, 2019, it used to trade at like maybe a PE of 22, 23. Then suddenly it went to a PE of 64, right? I mean, such type of massive expansion, PE going 3 times. I am not saying growing by 30%, I am saying PE going up by 3 times. You really need to ask, why did that happen in the first place, right? And whether or not does that make any sense. So multiple reasons, right? One was that, hey, political connections and all the contracts, jitne bhi aayenge, everything will go to Adani ji, right? Somehow, like, a lot of foreign investors started putting money in Adani groups, right? So this could be another reason. Third could be that the company performance itself, it went up like crazy, right? That they were doing something magical, right? Now, there are things that you can quantify, and then there are things that you can't quantify. For example, you can't analyze this really, right? You just have to go by impressions. This is something, the company performance, which you can analyze. What about this? This again, you can analyze. Would you put a positive here or negative in relation to the growth? That okay, PE expanded 3 times, right? Did the company performance go up by 3 times, or the industry outlook? So it's an infrastructure. Infrastructure mein aisa hota hai ki almost like 3 times growth suddenly will happen. That all you need to decide. You need to look at the numbers. According to me, the numbers still look off. Now, the final reason why I would say that it does not make too much sense to buy Adani stocks is very simple, that there are much better market opportunities right now for retail investors, rather than trying to bottom fish in a way, right? And betting on the fact, what, this group will go up, this group will not go up, all that stuff. Think rationally, even if you're of the viewpoint, yeah, what, I'm going to put my money in Adani Group, and it is going to, or my performance, stock performance will give me like a CAGR of 20%. Now, if your goal is to make 20% CAGR, why are you taking so much risk? There are so many good stocks available in the market right now. For example, I discussed on my member community also, and this is the post that I made, that okay, I'm selling Nestle and I'm buying all these different types of stocks. This is not a stock buying recommendation. This was a complete analysis of each of these stocks, that why am I buying CAMS? Why am I buying CDSL? These stocks are trading at 30% discount. Entire IT index is trading at a 30-35% discount. If you look at consumer durable stocks, they are trading at a 30-35% discount. So there are like so many better opportunities on much less risky assets where you can actually invest your money and grow it quite a bit. Let me discuss one very quick example here. So for example, if you consider CAMS, right now, how much debt does the company has? Company has a debt of 3%. How much ROCE does the company has? Company has a 50% ROCE. At what rate has the business grown? Well, the business has grown at a CAGR of 12%, which is not bad at all, and its profits have grown at a CAGR of 21% in the last 3 years. So are these bad numbers? Is the stock available at a discount? Yes, it is, right? Again, this is not a buying recommendation. So take a look that at one point in time, the stock used to trade at like 3,700. Now it trades at 2,100. There is still a good 30% discount on the stock from its peak. Again, not a recommendation to buy. I'm simply trying to drive the point home that there are a lot of low risk, high return type of stocks, potential high return type of stocks. Of course, some of your bets can go off, but why do you want to take so much risk just to make like 15% return on certain stocks? Which might or might not happen, the risk is very high. So please do that risk reward analysis. I hope you enjoyed this conversation. In case you want to pick stocks like Adani, please understand my perspective on where the market is going to go from this point. On this video, I discussed the market perspective of 3 big investors in India. One was bullish, one was bearish, one was sideways. So please listen to that. It would give you a lot of understanding of where the Indian markets are likely to head next. I hope you enjoyed this conversation, and I'll see you soon.